It's an everyday thing, it's an everyday thing, it's an everyday thing when you let your nuts hang.
What it do, everyday people, man? It's your boy PJ. Today, as you can see from above, we got the Free Tax USA video. I'm going to show you guys how to start a free return and file your state taxes for like $14.99. Okay, and we're going to go through some of the most difficult steps that a lot of people have when they are filing their taxes on their own. So I'm gonna walk you through them. Hopefully, you can use this as a guide and tool, and come back to it whenever you need it. I'm gonna break down each schedule and pretty much just give you an overall view of how to file a simple tax return. Alright, so now I'm going to go through the Free Tax USA. I'm going to sign up and get started, okay? So let's go through it. Let's start a free return, and I'm going to sign up a new account and everything just so we can go through this. Alright, so let's get started. I've successfully created an account, and let's go to... Alright, you won't need this. Did you know? Get around easy, because I'm going to show you how to get around easy. If you need support, you can always reach out to Free Tax USA, or you can send me an email, and I will charge you. So that's why I'm showing you this for free, and then you can take it how you want it. Alright, so I'm going to enter in this information real quick, and I'm just going to use random stuff, so, you know, don't think that this is where I live or whatever. So, alright, so I got this information filled out, and what I want to show you is this stuff is it comes set up, but you can do it on your own. Like, can a parent or somebody claim you as a dependent? No. Do you want to contribute to the presidential election? No. Is the person legally blind? Yes or no. Or has this person passed away before filing this tax return? Yes or no. Real simple questions. Answer those and move on to the next step. Alright, so this is where you would enter in your filing status: single, married filing jointly, married filing separately, head of household, qualifying widower. I'm not sure. If you're not sure, you definitely need to go hire a professional, okay? Alright, so where we at right now, for the sake of science, we're going to go with single, okay? Because I'm going to skip a lot of stuff that we don't really need to talk about, like dependents. We don't need to worry about dependents. That's the easiest thing to do, okay? Alright, and do you have any qualifying dependents? Qualifying children? No. Okay, if you do, this is where you will put that in. And if you did have qualifying children, you would sign for a head of household, not just single. Okay. All right, so this is where your personal information summary. All right, identification protection pin. This is one of my biggest videos. I had a lot of people who had to verify their identity with the IRS because someone falsified some documents using their name. Okay, so this is where you will put that information in if you have one or if you don't. Okay, if you don't have an identity protection pin and you need one, go to my video, how to verify your identity with the IRS. Okay, so if you want the deluxe support upgrade, you can do that, but I don't think you need that. I mean, if you've made it this far, you can pretty much do the rest on your own. And I'm going to show you how, okay? So on this screen, this is where you would enter in all your W-2 information. For sake of science, I'm going to go through it, but I'm not going to enter in any information because I don't want to be so specific towards W-2s. This is something so simple. This is the simplest part of the tax return, is entering in the information from the W-2, okay? So let's go on to it. Alright, so when you receive your W-2 in the mail from your employer or by email or however you receive it, the information you put in is simply here. It already has the social, and that's not my social. Alright, and you'll put the employer, the EIN number in, the address, and the employer's name and address. You'll put your address. Of course, this is already pre-filled. Then you go to your boxes, and you put these in as they show on your W-2. You do not do anything different, okay? Alright, so let's cancel. We're just going to go back. We're going to skip this for now. But that was a very simple adding your W-2 in, okay? We ain't gonna spend too much time on that. Alright, now, this is where we get to the meat and potatoes, okay? So what we want to do here is we want to enter in the business income, okay? Now, if you got forms like a form 1099 INT, 1099 DIF, those are exactly like entering in your W-2s. Like, there's nothing different about that. So let's go down to business and rental income. This is where we are going to get all our money. So if you receive a form 1099 NEC or a form 1099 mixed, this means you basically contracted out from somebody and you did a service for them and they paid you as a contractor. Okay, you can receive these as a business. A business owner can receive these, not just employers or contractors. Like if you have a business and you do a contracted job, the company that you do the contract work for will provide you with one of these. So if you did not receive these from a job you have done already, wait until you receive those. Okay, so let's go to the Schedule C. Alright, so in the Schedule C, do you want to enter in any information for your Schedule C that you operated during 2020? Yes. Okay. Briefly describe your business. Now, for this business, I'm going to do YouTuber because this is on YouTube, and I want to show you how to do stuff with YouTube. Does your business have a separate name? You can put yes or you can put no. If you have a separate business name, go ahead and put that in there. Okay. Now, choose the category that best describes your business. Now, you can do the accommodation, food services. That's if you have like a food truck or something. We're going to do arts, entertainment, and recreation for this business because it's YouTube, it's entertainment. But you have a whole list of other things. And real estate is one of them. So, we're going to go into real estate too, but let's go to arts and entertainment, and I can show you more. So when you go to arts and entertainment, it says what's the best that describes this business. Okay, so you can go to, alright, so we're going to go with independent artists, writers, and performers. Alright, so if we go down here to real estate and rental leasing, here's your long list of a lesser of real estate, offices of real estate agents, real estate property managers. Alright, so here we have the business code and the code that describes the business. Okay. Alright, does your business have an EIN? We added that in. Does your business have a different address than your home address? If it does, put this. Yes, you put this. If it don't, you know. Okay, did you start acquiring this business during 2020? Did you make any payments that would require you to file forms 1099? That means if you made payments out to contractors that are not employees, but they did contract work for you for a time, and you paid them, and you file a form 1099, this is where you would need to put that in there. And that's where you put that. Does your business have inventory or cost of goods sold? Actually, for the sake of science, we're going to do yes, okay? Just so we can go through this little step. Alright, so did you receive a 1099 NEC or a 1099 MISC? A 1099 MISC is basically when you did some contract work for a person, for your company did some contract work, and they paid you as a contractor. So as a contractor, you will receive a 1099 MISC from that company. Gross receipts, not on the form. So you can put, this is where you can put your receipts that you won't have, that you don't have on a 1099 for. So all your sales that you didn't do a 1099 for, you can put that in here. So like if you have cash sales, or if you have sales that if you have sales from a credit card company that you didn't get a 1099K for because for whatever reason, you know, you can put that in here. But you know, most likely if you sell anything on eBay, you'll get a 1099K. Alright, so you can put returns and allowances on expenses. Basically anything that a person returned to your business, they didn't like your service and you gave them money back, you will put that here. So for sake of science, I'm going to say we had overall a total year of $500. Miscellaneous income, whatever income you received to this business. So let's say we received $10,000 in miscellaneous income, because I don't want to put a bunch of stuff, but here's where I'm just going to put in some income, okay? For sake of science, we want to have some income. So this is going to change our federal return. Okay, so you see up here at the top, federal turns to 807. The reason why I did that is because I want to show how we gonna save money, or what changes the amount of money you save by what you input into the system. Okay, so beginning inventory value, this is something, if you have bookkeeping, this is something you look back on your books at the beginning, January 1, and you enter that number. Okay, we're gonna put in 0. The purchases you made minus the cost of items you get for a personal use. So if you made $50,000 worth of purchases, this is where you're gonna put that in here, okay? Or just say, we're gonna, for sake of being easy on shit, let's say $10,000. We did $10,000 worth of purchases. Total amount of cost in manufacturing of the product during 2020. Do not include the amount you paid to yourself. So anything you paid to an outside vendor or person or contractor or whatever is what you would put in here. Okay, materials and supplies. The cost materials and supplies to manufacture this product. So, you know, whatever it is it took for me to make this video is a write-off. So basically, it's all costs, man. At all costs, you just put a number to it. What's the value to yourself and your business? So right now, YouTube ain't making a lot of money, but it costs a lot of money. So, you know, let's put 1,000 because, you know, it's really over a year's time. Write down on paper what it is that you use on a daily basis on your YouTube or your food truck company or whatever. And if you don't have paperwork, just use a daily average of your stuff throughout the year. I mean, but you got to start having paperwork. This is going to be important when you're taking the next step in the business, okay? Having paperwork. All right, other costs. Yeah, don't worry about this because it's a lot of stuff you can consider to be other costs included in manufacturing your product. It's ending inventory value. How much did you finish the year with? So on December 31st, how much did you end with? And we're gonna say 5,000. So we didn't sell everything we had, you know, or we could have sold it. We just went back through it. You know what I mean? Just at the end of the year, you ended with this much, 5,000. Okay, so now I'm gonna show y'all. We had a change based on the amount of products we sold. All right, so this the total amount of purchases made, 10,000. So remember we was at 807 before. Now it's 244. So I could take all these numbers out. All right, see, we went back up to 807. So let's go back and let's add in those values. Pretty much we just put in what we put in and we lost. You know what I'm saying? We didn't make very much money. That's basically what it's saying. So now, of course, as we can see, federal goes down to 244. Okay, we're gonna make this go to 0 and possibly get you some money back. You know what I'm saying? So labor expenses, if you had any labor, any 1099, or if you had employees, that some W-2 employees, this is where you would put that in. Okay. Administrative expenses, basically, man, I mean, it is what it is. You got legal fees. If you have a lawyer, $1,000 for whatever. You know what I'm saying? Business travel. Where did you go to handle administrative situations like taking care of your bank statements, all this? So all that, you know, we're gonna just put 300 because, you know, you making all these different moves for your business. That's administrative expenses. That's what it is. All right, taxes and licenses. Okay, so in real estate, I have a real estate company. All right, so the taxes and licenses, the licenses that I have for that, you know what I'm saying? Every time I have to get go to a class or something like that, that all goes in here. Okay, let's get into the operating expenses. All right, so supplies. Supplies are like things that will not make your business money, but you use it on a daily during your business. So like tissue or cleaner. We talking about over a year. Let's go 500. Advertisement. Every time you sent something through the mail, or every time you had to put a commercial out, you know what I mean? Just put that in there. Office expenses is not the same as supplies, but office expenses is the same because it's really like the supplies you need for your day-to-day business in your office. For like, so if I need paper, ink, not printers, pens, paper clips, erasers, all that, you know what I mean? Let's just throw that in there, okay? All right, utilities. The utilities is based on the percentage of your office space to your home, okay? And this actually can help you calculate all this, but if you want to put that in here right now, you can. But if not, there's a more detailed place where you can put this. Okay. All right, we're just gonna keep it 55th Street. All right, equipment rental. I mean, did you rent any cameras? Did you rent any? I mean, did you rent anything to perform your business? So if you went out of town and you rented a car, there you go. Mortgage interest if your business owns some property. All right, do you need to expense business meals? Yes, all your business meals, expense them. So enter the amount you pay for meals that are subject. So man, let's just enter in 500 because we just gonna show you. All right, we at 244. All right, so now let's go ahead and save and continue. And look, man, we at 0 now. We at a 0 federal refund now. Now we're finna go into the positive. Okay.
It's an everyday thing. It's an everyday thing. It's an everyday thing when you let your nuts hang.
Do you use part of your home for your business, such as a home office daycare business? Yes. Yes. I'm telling you, most people who will be using this probably do have a home business. You don't have an office. If you have an office, you need to go see a real CPA. Alright, so home office description, just, name it bedroom or third room. Would you like to use the simplified method? No, we don't want to use the simplified method. We want to put in all this information because we want to be able to maximize our return. Alright, square feet of the area used for business. So if you have a 1,800 square foot, and let's say if you use 25% of that, that is about 450 feet. And we're going to say 1,800 square foot home. Do you own your home that is used for a business? Yes. You must own your home. Was a daycare part of your home? Yes or no? You know what I'm saying? Also, if you use the simplified method, you won't get this. This is what I was talking about. You will not get to put all this information in. Okay? So the direct expenses are expenses used specifically for your office. Okay? And indirect expenses is for stuff that you use for your home, but it affects your office space. Okay? Come down here. This is where we're going to come down here to repairs and maintenance. Okay, so repairs and maintenance. Basically, whatever you had to do to upgrade your office space. Did you have to paint the walls? Did you have to add a ceiling fan? Did you have to change the windows? Add any different monitors, or or put stuff on hang things on the wall? This is where this goes. You know what I'm saying? If you had to pay somebody to hang TVs up, or you had to, the cable company charged you because they had to come put another jack in. All that stuff goes in here. So we're gonna go 500. All right, you shouldn't have rent because this will be in your home. You know what I'm saying? You shouldn't have rent. After this, there's no more. You don't put nothing. You can put whatever other expense you have, but if you don't have anything, just move on. To enter in the cost of your home before using business, and enter. Okay, so the cost of the home is $120,000. The value of the land, we ain't gonna put no value for the land. Did you sell your home in 2020? No. All right. Home office depreciation. Third room, $769. All right. Do you need to? No. Vehicle expenses. Do you need to enter in a vehicle expense for a Schedule C? Yes. Alright, so let's put in Ram 1500. Big dog. Automobile under 6,000 pounds. Alright, so if you have a automobile that is a heavy truck, heavy SUV, or over 6,000 pounds, that is a tax write-off. Okay, so I mean that's a bonus. That's why you see a lot of people doing that. Did you date, place, and service? Did you purchase this vehicle new? No. All right, business miles. All right, commuting miles. We ain't gonna put nothing there. And then average daily commute miles. Was this vehicle used for hire? No. Do you have a vehicle for personal use? Yes. And read it and go through it and answer it, honestly. Alright? And do you own or lease this vehicle? Own. Enter any business parking fees or tolls. Man, I got so many. I'm waiting on one from Texas right now. And car loan interest paid. Now, however much you paid on car interest. So, our federal return is still zero. Let me show you how this will change. Alright? I'm going to go back to the income, right? And let's say the income was $50,000. This is going to change automatically. Woo! 6,000. Oh, let's go back. All right, so I changed our income to 2,000 so I can show y'all where this changed. All right, when we go to this vehicle expense, home office expense, watch me delete this third room and watch how much it goes from 523 to 783. So I'm telling you, all this stuff that we putting in is saving us money. We got 783, and you see I just deleted all that stuff off of there and made it go back. This page. Edit. Alright, so we're gonna turn that. Look at it. Made everything zero. Now, see, when you take all these numbers out of here, your taxes just goes up. But remember, these expenses is all write-offs. That's why they say, I'm using this as a tax write-off. I'm using this as a tax. This is what they mean. Our tax return, our taxes owed is $22,000. It was, earlier just fine. So We was at 0. So now we're gonna go down to depreciable assets. Now I'm gonna show you how we're gonna get the 2,000 down to 0 doing depreciable assets. Okay. All right. Do you need to enter any depreciable assets for your Schedule C? Yes. Okay. All right. So this is what we're gonna put in. Let's start with MacBook. Most expensive thing put in service. All right. 0101. Let's say we put this in 2019. So it's gonna accrue. It's gonna give us an accrual method of depreciation, right? All right. Let's go data dispose. Amount of percentage 100%. Original cost $1,200. Save and continue. It's a computer. Okay. Computer. All right. So basically, what this says is if you made any expenses to your laptop the prior year, if you did not make any expenses to it, then whatever. But if you did, this is what you would put in there, and they would give you an amount. Okay. So for sake of science, I'm gonna put 0. Okay. So now we at 2062. Now you could take. Did you take the one-time bonus depreciation deduction for your MacBook that was placed in service in 2019? You can put yes or no. Okay. And then you can put in the total amount that you want to expense. So 240. Put in 180 on here. If you put in any number other than that, it's gonna give you some bull crap. So just put in these numbers, okay? The depreciation method and recovery period for this asset are listed below if you want to make any changes. So look, now we at $2,091. All right, we at $2,091. All right. Now let's add in another one. Let's say a GoPro. 0101 2019. Did you purchase it new? Yes. 100% of the business. Original cost. I think it was like $300. And okay, it's a computer, cell phone. All right, camera. Okay. See, now we went down from 91 to 64. All right. We didn't take any depreciation last year at 179. Did you take the one-time bonus? No. And then we had 2064. Let's go ahead and add 43 in there and 32. Oh, shit. That didn't really do nothing. We went up. But that's not a big deal. Don't worry about that. Okay. So let's add in a desk. Okay, so 100%. Original cost $1,500. And the maximum amount you can expense is $1,500 on this one. So what you want to expense it? Bam. Look, we down to 1637. I'm gonna show you this. I'm gonna show you where we could do some edits, man. So when you do your timeline, so let's play 2020. Save and continue. 679 computer. Alright, so now it's giving you the option right here, because this is a new unit that was purchased in 2020, which was recently, and now you can expense that whole thing out. Look, it's saving us more money because that's a new purchase. See, everything was in 2019 was old, so they didn't give you the option. So everything you purchase new, they give you the option to depreciate the entire product. Like, it makes it so much easier because over years you're not gonna keep depreciating these things. You're just gonna put it in one time and go. You're gonna forget about it. Entering this stuff in every year is gonna become a pain, but you see how it is. All right, so let's go to generator. All right, date, place, and service. All right, 100% is used for the business. At $900. All right, save and continue. And tools, and you can write off the whole thing, 900. And now we down. Let's go with some really expensive equipment. 0-turn mower. Now, if you have a more specific, you can put that. Okay, 100%. And this was $5,000. All right, let's see how far we can get this thing. Pretty much. Now we down to 1,000. All right, 1,058. We're gonna expense this entire thing. We have 468. You know what I'm saying? So, this is what I'm telling you. You gotta do. This is where all the happiness begins. When you're in your own business, you have a small business, and most of your expenses that you make throughout the year need to be deducted. So this is where you do all this. All right. So I've already shown you. We went from $2,200 to now owing only $468. We done did all of Schedule C. Man, that's amazing. All of Schedule C.
It's an everyday thing. It's an everyday thing. It's an everyday thing when you let your nuts hang.
Alright, so now let's go on to rental income, which is the Schedule E. And we're going to go through this. This should take no time at all, just a little bit of time. We've already went through the Schedule C. Okay, so do you want to enter any rental information for 2020? Yes. Alright, so the types of property. You got single family, multifamily, vacation, commercial land, whatever. Okay, we're going to go single family. Okay, is this a foreign address? No. Okay, so I got all the information on the address of the property. This is a random address, so don't try to get it. Never carry over a loss, okay? Not saying never, but don't do it today. Alright, days rented. Since this is Tax USA for 2020, there's 366 days, but usually there's 365. So we're going to put the 366 in there. Okay, did you receive a 1099 MISC for your rental property? No. I mean, you don't have to. Alright, rental income. Enter the rental income for the single family residence for 2020 during a year that wasn't reported. So basically, the income that you received on the property. So say if the property brings in a total of $200 a month, you multiply that by 12 and you got $2,400. So you got to put down the expenses for this home that you've done over the year. Okay, legal and professional fees. Man, what's that say? 100? No, ain't no telling what's going to happen. You know, you might have a company. You might have to process somebody to get evicted. You know, or anything. Those fees go right here. Okay, management fees. Say if they charge you by the property or they charge you by, you know, overall. You know, you put that here. So, and if they charge you $30 a month per house, you know, 12 months, that's, you know, $360. So that's where you put this, $360. Okay. All right. Mortgage interest paid to the banks. You know, you'll get your 1098. You know, of your mortgage interest. You know what I'm saying? So you can put that in here. Your repairs that you've made onto the home caused by damage. You know, of just your tenant or just basic repairs. You know what I'm saying? So let's add 1,000 into that. You know what I'm saying? And the supplies, 100, whatever you needed to do that. All right. So then there's that. Need to put in the depreciable assets for this rental property. And yes, you need to put the home. You can put 4909. And whenever, you know, they placed in service. No, did not purchase the asset new. No, 100% original cost of the property. Let's say it costs $120,000. Okay, this is for research purposes why I'm putting these numbers in. Of course, you have to fill in actual numbers, okay? Now, alright, so it is real estate, okay? Let's go. And it's a residential rental property. Okay? And the cost of the land included, you just, it's in the home. So there's not no land associated with it. So the depreciation is $4,182. Okay, so here you go. Okay, so now we're finna see some changes. We can view the Schedule E right here. Let's go ahead, just take a look, browse over. We didn't do the Schedule C like that, but you can see. So that is our Schedule E. Basically, you do this for every property. So you say continue every day. Okay, we is done. It's asking if we have more properties. You can put every property in, and we're gonna go no. Now let's go on to our next step. Alright, did you work more than 750 hours in real estate? The typical person that is doing this on the side, like myself, I'm not working 750 hours. I'm not even working 1 hour a day on real estate. You know what I'm saying? Income summary. Woo! So total income, $2,035. Man. Alright, so let's get to a great part of this video where we talk about itemized deductions. These itemized deductions will increase the amount you will get on your federal taxes. If your itemized deductions is over $12,400, this is where you're going to save all your money. If you don't have itemized deductions over $12,400, then just leave it alone. But basically, you can only give $500 to charity in a calendar year, don't think that just because you donated that you should get some cash back. It will not help because it will not go above your standard deduction of $12,400. You would have to itemize over $12,000 worth of expenses, and this is where I'm gonna show you where you can get your itemized expenses from. Alright, so we starting this up at 2,253. Okay, we're doing this for science purposes. Okay, I want to show you how this changes by the information that you input. Okay, alright, so let's start with medical expenses. Alright, and this is where most people get the most of their itemized deductions from. Okay, so health insurance premiums, any health insurance premiums you paid out of pocket. I know, but if you did, this is where you would put them. If you are you were only your own business, or you didn't have a business, or whatever you was doing in life, selling drugs or doing whatever. But if you had to pay insurance out of your pocket, that's where you would put it. But I don't do it. So this is where we want to go: doctor's expenses, dentists, chiropractors. How much did you pay when you went to the doctor? If you went to the doctor 50 times and it's $10 a copay every time, that's $500. So bam, I mean that's a no-brainer. Okay, the amount of medical expenses you paid directly to the hospital, any medical bills. So let's say $5,000 and hospital expenses, medical equipment. You know what I'm saying? Let's pay $500. Okay, this is everything: eyeglasses, wheelchairs, braces for your legs, wrist braces. Anything that's a medical supply. You know what I'm saying? Asthma medicine. Traveling expenses. If you had to stay in a hotel, they only give you like $50 a night for like hotel lodging and stuff like that. But if you stay there 5 nights and you paid out of pocket, that's $250. You know what I'm saying? So we're gonna put $250. All right. Other medical expenses. The definition of deductible medical expenses is very broad. Example of miscellaneous deductible medical expenses include acupuncture, alcoholism treatment, ambulance costs, birth control pills, childbirth classes. Look, I went to rehab. It cost $20,000. There you go. Okay, so now we at 2,253. Okay, this is our sample number. So watch what happens when we do the itemized. Bam! I mean, we went up $800. You know what I'm saying? So now let's go to when you enter your mortgage interest, that's something you'll put in there. Go ahead and put that in there. Donations to charities. This is what I'm telling you. You can only deduct up to $300. All right, so now we at $3,056. And no change. See, I told y'all that them donations to charities makes no change at all. I think we are almost done. College tuition expenses. If you went to college, you can get an extra $1,000 once you fill out this. When you get your 1098T, you'll get an extra $1,000 for the opportunity credit. Also, you can write off up to $4,000 in books and supplies. So you can potentially take this number from 3,000 to 4,000. Okay, so let me show you how to do that. Alright, do you need to enter in the T98 form? Yes. Okay, payments received for qualified tuition or related expenses. You know what I'm saying? However much your tuition was. So if your tuition was $3,500, there you go. You know what I'm saying? Put that in there. Save that. Alright, so now there's a tuition. They're going to say, do you need to add another university? No. Alright, so books and supplies and equipment and fees not required to be paid directly to your school as a condition. This is where I said, you know what I'm saying, you can put in the up to 4,000. So we're going $39.95. We're going to push it to the limit. Alright, 3,056, okay? Now, do you need to enter education expenses for another student? No. We have automatically calculated which education credit and tuition deducted each student is eligible for. So I told you $1,000 the education credit, okay? You done went through all the common deductions and credits, and we are through. Now remember, you can go back and see all this stuff. You can check through whatever one you want to check, and if you have any questions, you can always hit these question marks. Man, they'll help you out. If not, you can email these people, or you can send me email at everydaythingwithpj@gmail.com, and I will charge you $50 by Cash App. Then we'll have a conversation, okay? Other than that, man, they'll help you out for free. And then you can just refer to this video. Okay, now so we at the deductions and credit summary. You know, this basically is going to give you a rundown of everything, or where you get it from, how you get it, or whatever. And education credit, $1,000, you know, standard itemized deductions. You know, we balled out. So now, for this year, we getting $4,000 back. So I want to show y'all, I'm showing y'all how to get the money. Okay? Now, if you have any questions, comment below. I'm always in the comments. I'm always responding. If you want to get, if you want me to help you out, walk you through this, call me, email me. I'm gonna charge you right off the bat, no doubt. But I got you, and that's only for 30 minutes of my time. And hey, I can help you, your family, your auntie, your grandma, whoever they want to do. Email me everydaythingwithpj@gmail, and I'll help you do your taxes. You know what I'm saying? I'll walk you through it. It'll take us 30 minutes or less. I charge you the $50, and we get it done. Okay? Alright, and that is it. Thank you everybody for watching. I hope you liked all these videos, and I'll see you on the next one. Peace.